great night, everyone, and happy Monday. So hopefully you guys are doing fantastic. Let's just do a recap today on what happened, and also we're going to be going over a couple of altcoins just to keep track on what could be going on in here. But if you haven't, please check out the morning market report where I talked about what is happening in the markets, what could we be expecting maybe out of altcoin, and how migration of capital might be playing out at this point. But other than that, let me get started with you guys because you guys are amazing. Let's get started with Alexander G. What is up, the queen mode of the internet? Welcome. We also have Harp. Welcome, my friend. By the way, I always see that you show me the orange juice and the coffee. Nice there. Welcome. Have you also tasted yourself? Let me know. If not, well, just let me know. I still love it, bro. And who else we got in here? I think that's it for now. I know it's Monday, but let's get going and start seeing what we're gonna be talking about today. Today we're gonna be looking at wedges. All right, so I know we touched on wedges, especially on chapter number 8 and 8.1. We went on the psychology of wedges, but also we talked about broadened wedges or megaphones. All right, I want to go a little bit more in depth on those because they tend to be reversal signals, right? And despite they are very similar, they can be looking, or they could be a little bit intimidating, especially the megaphones, because they to start getting broader, right, or bigger on the reaction time. So hey, DGT in the house, welcome, my friend. Welcome. Let's go. And well, then, other than that, we'll see how we can be using them in our favor. Nonetheless, let's get it rolling on what we left out, and let's see how that played out, because guys, we called it out, and it's playing out right now. Let's go and watch it. All right, Friday, we talked about megaphones, wedges, and the difference between triangular patterns, right? What is a triangle? A triangle is a converging area, right, where you have two directional converging bottom and top, right? And then a wedge, the difference between that and the wedge is that in a wedge usually you have some still converging but pointing at the same direction line of sight. For example, when we have this one going up and this one also going up, you see they're wedging up, but they're pointing at the same direction, where in a triangular pattern, they're pointing at a different direction. For example, let me give you an example right here in there. And then like this one, you see that the two lines that define this triangle point at a different direction, where the lines pointing at this wedge point at the same direction. All right, well then, also we're gonna be looking at today's megaphone, because I think we need to take a look at the differences, because they tend to be a little bit intimidating, and we've been tracking a couple of megaphones at this point, right? One of those being this huge one. Remember when we talked about this megaphone, and we also were looking or exploring the possibility that this megaphone was all the way or bigger, right, all the way down there, going all the way up here. Well then, this basically making it a huge megaphone, but still we kind of like went naked on the charts. All right, so basically turn off everything, and we also explore the possibility of a neckline. There we go, a cricket neckline on a possible inverted head and shoulders. Let me recap in here. Remember that what we want here, it is confluence, right? Regardless what you do, try to go for a one route and then turn around and go for the other route. You want to find where those routes are converging. All right, in this case we have the converging of the neckline, right, and of course the megaphone breaking through and going upwards to this area. Also, what else we got in here? Let's go to the previous Bitcoin chart. No, not that one. Well, I guess this one, but didn't we have another one? Oh yeah, perfect. This one, which was a down sloping wedge or range, right? And what we have, a channel up boundary up here. All right, So something important here is that we also learn how to push or start predicting how that channel or that wedge or that triangle could be breaking too, right? Usually on ranges, we call it for a 50-50%, just like in symmetrical triangles. But when we start adding volume to the calculations, right, and remember that we were doing this, measuring those highs and lows, right? Well, then we ended up then collapsing them together and seeing that the volume is pushing above more than below, right? Therefore, giving us a high possibility to break through the upside. Guess what we have right now? Yes, I know, I was speculating for a possible last sweep of the lows to the median and then breakout. But what is happening right now? We have the actual breakout. Also remember that we have circled the areas where we enter and exit. This was my last entry, right? And what happened after that last entry? We popped out of that range, and at this point I'm already out of this trade. All right, so guys, if you are still on that trade, this is not a financial advice, but consider taking some of your gains. Why is that? Let's go back and let's use our previous analysis from the Wyckoff theoregram. All right, so let me just get in here. Let's go. Oh, wait, it went all the way down here. All right, this is the one I want to show you. All right, remember that we also have been trading on this one, basically finding out the spring. The spring is a double bottom in here. All right, this one here. Let's go to another cleaner chart. Let me just get rid of everything here. All right, and this is it. Let me also get rid of this ones. Quickly. All right, perfect. And we'll see that we have coming back down range, right? V-shaped recovery that give us 70% chances of ranging. Not only ranging, but also redefine, and we have to find this here together, right? Our inner range and our outer ranging here, right? In fact, our inner range was a little bit smaller, something like that, to compensate for this high and this high, and then our outer range was in here. All right, this is not the first time we do it. Let's go and change here from this area to this the following number one, and I want to go to this setup here. Also, I need to change this. All right, and let's go to chart prime plus. There we go. This should be making a change. All right, perfect. And we don't only have, well, this was from today in the morning. We're going to be visiting by the TRX on the 1 hour to take a look at our broadening wedge, right? But at this point, I want you guys to remember how we have been working on that ranging segment, all right, on the 4 hour and on the daily. Let me just make it cleaner for you. There we go, right? And based on speculation, well, then we are thinking that we could be repeating the blue lines, basically same that happens on 2021 cycle, which means we could be breaking through retest enough. We go for an early breakout, right? So this one being this one here, or we could be having a rejection for then finding the previous low. So it's not about the breakout, it's about your retest, big retest on the big trend line, and then on the retest on the trend line, now off we go with a breakout secondary retest on the channel. All right, let's go for a more in-depth analysis. This is it. All right, so what are we seeing here? This is the outer range, right, and the inner range. Exactly what we're measuring here: inner range and outer range. Basically, right, going from the spring to the first entry right here to a secondary entry, full entry, to the next target at the top of the range. We don't know if we're gonna have the breakout continuation. All right, because if you study Wyckoff, and I know I only show the scheme or this schematic, and this is because, guys, this Wyckoff guide, it went nuts. It went like complete nerdy on these things, right? If you start researching his work and reading his books and stuff, you're gonna be seeing that you have like, I don't know, easily 20 different ranging scenarios, right? When you have double bottoms with no spring, with then a reversal continuation, which is a flat pause of bearish continuation, when instead of breaking up, we break downwards, all right? So you just have different numbers. Therefore, I have summarized here with you guys that do not learn all of those 20-ish schematics. Only use the ranging scenario, right? The thing that plays out the most, it is coming down, range, V-shaped recovery, and that gives us 70% chances of ranging. Your job is to find that early range so you can make money on this range. If you don't remember that, go back to some of the chapters down behind here and look for the range and how to trade ranges, right? Other than that, what are we expecting here? We are on rejection zones. And are we? Yes, we are. Right there. Let's bring up chunky candles in here. All right, let me just minimize this. And we are right here on a reversal zone. This drawings that you see that I'm deleting at this point, and also these blue candles, right, are from another concept. This concept is one of my own creations, right, or not creations, just discovery, right, on some patterns that I call goose heads, right? If you look at this thing in here, it looks like a goose head, right? Not all the way, but you'll see that if I zoom in and then I just make a line in here. Let me draw that line. Where is it? Right there. You'll see that this looks like a goose or a geese profile, right? And then with a little peak with another color, right? Usually that tells me that we're going to be having a further move to the upside, or a little retracement, further move to the upside, creating a bearish divergence here, right? And then a retracement following up. Where do we have the goose head? Right here, right? If you see, there's a line also right here showing you where the goose head was. The little retracement, the further continuation before the big retracement. All right, don't worry, we're gonna be going into a little bit more in depth in here, right? Just so you know what those drawings are, but also the difference of what we're having at this point. When we had this goose head, all right, let me just bring it up in here. There we go. You'll see that the goose head was right down below here, and the further move to the upside happened to the reversal zone. Well, right now we're having the goose head. Look at that, and I'm grabbing the goose head on the candles all the way up here, right? You see that? So maybe the little retracement which we are having already, look at that little retracement, right? And then the further move to the upside could mean that we are breaking above the range instead to get into reversal zones. You see that? All right, so if we're able to break the range to the upside, well then the rejection most likely is not gonna be as dramatic as this one, right? It's gonna be less dramatic because it's gonna be a breakout, maybe a retest somewhere around here, and then maybe create a trend line or follow another trend line that we might have. So far, here is a secondary point, our first point in here. There we go, secondary point. So there we go. Maybe our next hit or bounce could be all the way down there. Oh, and I cannot modify this, but let's just leave it as is. All right, so what are we going to be expecting? Either a reversal or a further continuation for then our possible next entry. All right, so don't get me wrong, I'm bullish, I want to be bullish, but we are reversal zones. That's why my entry from here right there, which means my entry right here, it's the same entry, it's already giving fruits, and I'm collecting those fruits all the way up here, basically all the way up here. Remember my smaller entry. Let me just bring it up here. Let me just remove everything. Let's go right here, trading with OC. And finally, let's also change our layout here also with trading with OC. So we have a cleaner setup to work with. All right, there we go. This is not only the range, right, or the pattern. We also are in reversal zones. All right, we have the goose head. Perfect. There we go. So how could we be maybe measuring this? All right, or what could it happen? Well, then if we have a rejection, we're gonna be having it to our next big area of support. Where is it? Our SMA combo. Remember our SMA combo, or if you have it, your market oracle pro plus in here, your dynamic reactor. Both of them, as you can see, they're very tied together. They're not exactly the same thing, but they're very close, that they are nailing it on those areas of resistance and support. You see that? So despite they move all over the place, one related to another one, when it matters, look at that, they are converging to provide support. All right. So the next thing is locating our first entry. Remember that right here, I was expecting a further move to the upside and maybe a rejection to a double bottom. It played out. So first entry was in here. Secondary entry with 1/2 of a position was right here because we were closing back inside the outer range. Basically this low in here. Also remember what I explained, and I have been explaining all across of the pattern charts, right? So chapter, I believe 7, 8, and 9 now, which is when you start seeing the price action closing back inside the pattern, that pattern being called triangle, wedge, broadening wedge, megaphone, range, or whatever pattern you like, when you start closing back inside, well, then the actual possibilities for the price action to hit the other side of that pattern become a very big possibility, right? So basically, let me just show you. Let's say that we have a range, right? We have bouncing, 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 fake out, close back inside. Usually means that we're going to be hitting the top of the range, right? When we have a triangle and we have up, down, maybe fake out, and then we close back inside, the possibilities of hitting the other side of the pattern become very dramatic, right? The same the other way around. Maybe we have a rising wedge, right? We do like this, and then we start closing right here. Well, then the chances of hitting the other side of the pattern, they become very big. All right, so the same thing happens with this pattern here with the range. So basically we close back inside. What happens? Our SMA combo hit. I was looking at, there we go, my dynamic reactor, and also a couple of order blocks and predictive ranges. Let me show it to you. There we go. And as soon as we start hitting some of those zones, I took half of this. What is half of 1 medium? It is 1/4. So at this point, I took 50% out in here, and I'm still rocking a 1/4 entry all the way from here right there. That's why I can very easily be taking this position out on retracement zones, in whatever is left on my 1/4 zone here. Bet it for either hitting my SMA combo or for a breakout retest. Off we go. So at this point, I'm in a no impossible losing position. So at this point, and this is what I always want to show you guys, we need to set ourselves into a position where losing is no longer a viable option, right? So let me also see you guys here. We have Key DGT. What is up, brother? Welcome. Mike Volumer. What is up? Welcome, brother. Who else we have in the chat? I think that's it. Welcome. Thank you so much for joining, guys. Really appreciate you guys jumping into the chat. Click those like button. It really helps with the algorithm. All right. So right now we cannot lose at all, right? Because we already have taken profits from here, this full position, taking profits, half of this position taking profits, right? We are in profits regardless. What's going to happen if it goes all the way down here, then I close my position here. Still in profits. Yes, I know. I could be missing out on this. That's why I took early profits here and full profits there. So I can confidently let this run, right? Who gives maybe that is the next range breakout? Because if you notice here, I know this is not the exact same thing, all right? But we have, let me use this tool in here, a range. Who gives that maybe we are right here? Yes, you might have your next change in here, but if I enter somewhere around here, right, who give that I could be maybe writing this all the way up and maybe re-adding half of my position right there, which means, let me show it to you, that whatever I had in here, I took 50% out and then I add 50% in. So I average down to my entry point in there, and then off I go for a greater and better position. You see that trick? Basically, I'm using my anchor point, and that's what I'm trying to get in here, an anchor point, that whenever I add more somewhere above here, my entry price is still below here, and I'm taking less of a risk, right? So I'm leveraging my entry point, my lower entry point right there. I still remember I already have taken some profits, and regardless, as long as I don't close it below my entry point, I'm still winning. All right, let's go, and then let's just jump into the broadening wedges, right? Let me just clear this up because we need to discuss wedges and of course megaphones. So let's get started for a recap, right? Difference between a triangle. A triangle has two different support resistances, both pointing, right? You can see a triangle here. Let me zoom in so you can see it better. Oh, come on. Here is symmetrical triangle. You see? One pointing downwards and the other one pointing upwards. Converging zone. So this is a triangle. What other kind of triangles we have? We have flat tops triangles. All right. Usually we break to the flatness of that triangle. And then we also have flat bottom triangles like this. And where do we break to? We break to the flat area of the triangle. When we have a symmetrical triangle, right, like this one, the chances are 50-50. So what gives, right? At this point, remember what I always tell you, the gold is in the boundaries here, right? In the lines in here. So you can take your action as you're breaking through or you're breaking retesting, right? There we go. Look at that. If I expand this, it's not about the breakout, it's about the retest, or maybe your retest, and then off you go with a flip of the ribbon, losing your SMA combo. Maybe you're right, maybe you lose that one. Don't worry, it's not about the breakout, it's about your retest, and off we go once again with a flip of the ribbon or with the flip of the ribbon. All right, so don't worry. And what I'm trying to show you here is, despite you can have multiple entries when you already know what you're looking for, right? Usually we're looking for breakout retest, right? So at this point, what could we be maybe expecting on wedges? The wedges, and we'll see a couple of examples, are instead of opposite lines converging, we have the same direction converging, right? So let's just say that this is the price action. We go up, down, go up, down, and usually when it is at the top, right, a wedge, usually it is a reversal pattern. Remember that we also talked about in chapter 8.1 morphology of a pattern. When a pattern started being one thing and then ended up being another one, all right? This is gonna be very important. Why? Because look at, for example, this wedge in here, all right? If we consider the wicks, here's a line of support, here's a line of resistance, all right? Usually wedges are what? Reversing patterns, right? But what if I add maybe a pole in here? At this point, the morphology of this, right, it's becoming more like, let's put it here, bullish flag, so you can see that I'm not just taking this out of my pocket, right? There we go. What's happening? We have a wedge in here with a pole. All right. Oh, maybe you're not able to see this. Let me see if I can scroll it up. There we go. A wedge, right, with a pole in here. So something like, well, this is a Browning wedge. Here it is, something like that. You see that? So for a continuation, let's go back to the charts. So what does this looks like? It actually, I mean, to be fair, I would say that this is a bull flag, right? But it ended up breaking to the downside. So it was not a bull flag, it was a wedge. And remember, it's not about knowing what is going to be breaking out. Of course it helps, right? Of course it helps that we know that usually what a bull flag ends up breaking to the upside, but also a wedge, it's a reversal pattern, right? Especially when we have a reversed wedge. For example, let me show it to you. Usually on a reversal patterns, we want to have a, let's just call for price action going downwards, right? Then we have a wedge, right? So let's measure that. This kind of wedge, a wedge pointing downwards, so both of those lines are slightly pointing downwards, all right? And we're coming from a bearish trend. Usually this is, and let me exaggerate this just a bit more, all right? In fact, you know what? Why don't we just look for one of those? Usually they play very well, especially on Bitcoin, lower time frames. Let's go to the 1 hour. Let's go reversal of trend. We need to look for a bearish trend. And then that wedge example. All right, here's a wedge example. It's not the perfect wedge, but we'll see that wedge. And then I'm going to be finding another one, just I don't want to bore you here, all right? But look at that. We're coming into from a bearish trend. All right, we have a wedge, and then what happens? A reversal pattern. Is this a wedge? Well, then again, it is a wedge, but this is because of the breakout, a flat pause of bearish continuation. All right. So how can you know? Well, then it's not that you actually know, it's that you start reading the signals on the patterns, right? So you know that there is a pattern. You know there is a wedge, right? And let me see, what I cannot find any. All right, let me see. Man, I see them everywhere until I'm searching for them. So, am I in Bitcoin? Bitstamp? Yeah. All right, whatever. I mean, we have another wedge in here, but usually when we're coming downwards, all right? And then we have a wedge like this, right? So coming downwards, and then we have the wedge pointing downwards. Since a wedge is also a reversal pattern, this wedge usually breaks to the upside, all right? When we are at the top and we mimic this, all right, but to the other way around, usually that is also a reversal pattern, all right? And we tend to break to the downside. So we're going to be looking more like this. This is one of the reversal patterns that we could be looking for. Usually when we see this, we also want to corroborate that with a bearish divergence. I don't know. Maybe I'm just too far away from my divergences to plot. Let me find those divergences. All right. Perfect. All right, so we have divergences. So a little trick that I use in here, it is that when we're going downwards, oh, look at that, and we're forming, right, the wedges, regardless of which wedge, usually the down pointing wedge, right? I want to see a divergence being created. Why is that? Because I have a higher momentum or higher volume, while I have a lower, and look at the area where we're pointing out so you can clearly see, right? So you see how we're rising up here on momentum, on volume, and we keep going downwards in here, right? And then we do the accumulation pressure, and boom, we burst. Big body candle going through your SMA combo. What happens is not about your breakout, it's about your retest, your entry, and off we go. Happy days. All right. So this is basically one of the how the psychology of the breakouts of these patterns played out. Let's start measuring. Let's talk about the possible measures, right? Because they're different, slightly different from what we're used to. Usually, oh, here it is, another reversal pattern. There we go. Wedge. All right. In this case, I'm going to be cloning this. Why? Because I have a buffering zone. Here we go, buffering zone. I could even just move this slightly up. And then this one also slightly up. There we go. We have our buffering zone. We could also do the same thing here to incorporate these stops. And what we do, we clone this. And we have our buffering entry zone. The same thing that we have been doing based on the Wyckoff strategy, where we measure the outer downward range and the outer upper range. We have our area of build up or profits, and we have our area of entries or taking profits, if that makes sense. The same thing we're doing on this. It's just basically a range, shrinking range, right? Or broadening up range, if that makes sense. All right. So the same strategy we are applying here. Hey, we have Lunar Beach Crypto in the house. Welcome, my friend. Really happy to see you around, brother. Thank you. So let's take a look at now what happens in here. So remember, when we have a broadening wedge, right? Sorry, a wedge at the top, usually it is a reversal pattern. Something important about the wedge ratio, and this is what I wanted to get to, it is the pulse size. Remember when we talked about in chapter 8.1, morphology of a pattern, all right? What is the morphology of this pattern? So how did it started? Well, then let's go back in time and just ignore, for example, the first time, let's just ignore this part. What we had at the moment? At the moment, we had a bullish or a symmetrical triangle. All right, let me clear this up so we can see it. Maybe symmetrical triangle like this, right? But also we could be looking for a possible pull. This pull usually is defined from the big area of support or the first hiccup that happens there. All right, so that's your pull. And then what happens? Well, it's not about the breakout, it's about your retest. Off you go. But oops, you did ended up going one more time up. Oh, look at that. Now we can start forming a different pattern, which is what? A wedge at the top. As we seen on a bullish flag, right? Man, how can I just move this out of the way? Maybe push it the other way around? I don't know. Maybe move myself off here. Dude, I'm just... All right. As you can see, the channel, the wedge, or whatever is happening here, right? Let me see. Right here, depending on the pulse size, right, it's going to be defining whether this is a flag or if this is a standalone figure. All right, so that's why it's important to consider the morphology of that pattern. For example, in here, I could very much be saying, right, that this is in the limbo between a wedge, all right, and a bullish flag. So how do you trade it? Well, then who cares about how do you trade this? Well, not who cares how do you trade it, you trade the inside, right? Where's it going to be breaking out? Who cares who's going to be breaking out? Because as you can see, this is undecisive. I know this is not what you want to learn. This is like, hey, learn this, but then don't care about it. I know this is one of those things, right? But believe me, knowing what you're seeing will dictate the possibilities of reaction, right? That's what I'm showing you here. So at this point, I have two possible options. One, standalone wedge, breaking below, breaking to the downside. Two, that looks like a nail. Two, a possible bullish flag, break to the upside. How do I measure if this is a possible wedge? Usually that wedge is measured from here to there on a possible breakout zone. There we go. Here it is. What do you got? A very close reaction. What do you got there? You have your SMA combo. So what could you be maybe expecting out of that? Well, if you don't catch the break downwards, well, then you catch the bounce to the upside and then the reversal, right? So that is how you trade this. It doesn't matter how it breaks out. What important it is when it breaks out, you already know which pattern is it, and basically you already know where your targets are. All right, so it is not about predicting the future. It is about already knowing what you're gonna be doing based on whoever or whatever is acting right now, right? So whatever pattern, that's what I mean. So let's go and pretend that this was a bullish flag. All right, let's pretend it was not. Let's just pretend it was. For this example, I'm going to be measuring this breakout, right, and retest. Oh, not that one, sorry. Let's copy candles. There we go, like this, right? Let's just say that we broke to the upside. Perfect. So what do we have in there? Well, then if this was a breaking to the upside, well, I measure this. Oh, by the way, man, this is just crazy. And what I do, bring up support, bring up resistances, and what do? Well, then I see a resistance. It's not about the breakout. Your retest, my entry point for a bullish movement. Off we go, TP1, TP2, trail it until it takes me out on TP2 once again, and happy days. I already have my breakout reaction. So as you can see, right, depending or knowing what is a broadening wedge, knowing what is a wedge, knowing what is a bull flag, knowing what is a bearish flag, knowing what is a pennant, knowing what is a symmetrical triangle, give you possible reactions. So by understanding the morphology of a range or a morphology of a pattern, which means one pattern can become another pattern throughout time, you adjust your possible breakouts and results based on what you have. All right, so let's go and take a look at just the last piece of the puzzle. For that, I promise that we're going to be looking at it was, what is it, STX? No, it was STX, TRX. So TRX, right? TRX, perfect. Let's just add it. Let's see it. Double click, 1 hour, and boom, here it is. All right, here we got, and let's just hide a couple of stuff, right? Let's see that we have right here a very clever broadening wedge. In fact, we can do much more with this if I just go ahead, get these candles maybe, right, like this, and then clone this, of course, just like we calculated our outer range on the Wyckoff theory. All right, and then we do the same thing here. Again, those are reversal patterns, right? Especially when they're coming from a downtrend. All right, when they're standalone, a broadening wedge, I usually call it for a bearish breakout. All right, but still, we need to measure or predict the morphology of this pattern. For example, coming down the range, we have a dead cat bounce. We can create a trend line right? Based on that trend line, it's not about your breakout, it's about your retest, and off we go. We have another trend line, but guess what we formed here? We formed an area of interest, right? Usually on that kind of areas of interest, we form order blocks. So let's just mark it, all right? Could be having an order block in there. So what are we going to be looking for this? And also, how do we measure the possible breakout in here? I have my own way to measure it, and I also want to show it to you, but also there's a couple of ways to measure this thing. Usually you go to the second wave, right, and you calculate that as a possible breakout, right? And that's what you have, right? Either here or the other second wave, which tend to be very similar in price action. There we go, and you just measure when it breaks out. So for example, from here to there, or when it turns around to there, or if it breaks up to the upside, to whatever it breaks to the upside, right? But again, the gold is in on the boundaries, right? So if we can catch this one and we can nail it all the way up here, well, then that is very juicy. Or if we just wait it, get in here, what are we expecting then? We're expecting a flip of the ribbon. We're expecting a bearish divergence. We're expecting a reversal pattern, a pattern inception, pattern within patterns, right? And better yet, if you start adding your support and resistances, guess what we got right there, right? Man, and I kid you not, I just turned it on, it just was right there, right? So look at that, a beautiful resistance. So what is the point that I'm going to be looking for a resistance? Up there. The confluence, it's right there. So let me just give you now my measured zone. This is, and we also have talked about this, all right? Let me just right click. And do I have it on Bitcoin here? I should. I do remember that we did it in the 4 hours, if I'm not mistaken. If not, we'll just look at it. No, I think I already have deleted, but whatever. We'll take a look at that in a second, all right? Nonetheless, let's zoom in here. Could this pattern, because I'm on the 4 hours, be a reversed bearish flag? Because just like we have a bullish flag, and look at this bullish flag, how, and let me just move me out of the way, there we go. Look at this bullish flag, it is a downwards broadening wedge right here. Downwards broadening wedge, you see that? All right, having said that, let me just get rid, and then instead of bullish, let's do bearish flag, all right, pattern. What happens here on a bearish flag pattern? Here it is, bearish flag versus bullish flag. It also could be right down here a what? A wedge, just like it is in here, bear pattern. You see that? So we talked about being reversals. Usually the reversal points at a different direction, but that's fine. Let's just finalize with this one. This, I think, is going to be a much better guidance on how it breaks, all right? So now that we have this pattern here, let me just right click. Let's just copy this. Oh, come on. Copy image. Let's see if we can paste it. Oh, whatever. That's fine. All right. Based on this, could this become in, let me just make it invert scale. There we go. Does it look like a bullish flag now? It does. It actually does. So where is it going to be breaking out? Well, the psychology of breakouts at this point tells me what? There's going to be maybe breaking to the upside or to the downside, depending on what depending on if you're looking at inverter or not, right? But at this point, it tells me that I could be breaking to the downside. But who gives, right? Remember, at this point, the gold is not on where is it telling me to break out. The gold is in on the boundaries of my broadening wedge. So at this point, it looks juicy if it gets here and I can short it all the way at least to my median or all the way downwards. All right. Now, how do I measure this target? Let me just get this line. This is the median. All right. style. Let's just make it more simple. There we go, thinner line. All right, much better. Oh, my bad. It should be dashed. All right, perfect. That's my median. I like to measure the median movement from whatever it is to the upside, and that is gonna be my breakout pattern. Look at that. This usually pairs with your second wave, right? But it also increases over time, because the bigger the pattern, the better the shape, the better the reaction. All right, so this is not only just fixed into a second wave as we have seen before, right, or as we have learned, but also factors in the growth of that parametric movement, if that makes sense. All right, so slightly different, very similar, slightly different. All right, so basically on the maturity of the pattern on this broadening wedge, the target will change slightly. All right, so that is it for today's class. Basically we cover wedges, broadening wedges, right, downwards broadening wedges, in their psychology of breaking, right? So tomorrow we're gonna be doing a little bit of a recap. We're gonna be looking for examples of trading. Tomorrow is gonna be 9.1, where we combine all of the patterns that we know and all of the patterns that we can trade on. Hey, we have Alex O, see what's up, brother. Oh, crypto, welcome. Oh, by the way, we have also MJ Maho Move, welcome, thank you. Hey, by the way, if you don't know, she's taken already. She signed a contract. She's looking at me. So thank you so much, Alex on Crypto, for being in, staying around here. Maybe tomorrow, if you have time, maybe you can come back in here, because we're gonna be looking at your favorite patterns. We're gonna be doing a recap of all of the triangles, brother. So I think tomorrow I'll call the session Alex on Crypto favorite episode ever, right? So all of the triangles ever being together in the same space, right? No, just kidding, brother. Majo, will you marry me? Nope, sorry, bro, she's taken. Oh man. Congratulations, MJNOC. Thank you. All right, guys, so I think that's it for today. Hopefully you have had a great session today. If you have any questions, or if for some reason I made some hiccups here and there, let me know on the Discord. I'll be more than happy to go over any questions that you may have. Also remember that tomorrow you can come over there in the question side, or in the conversation, and ask me anything, right? I'm gonna be more into the comment section, reading you guys, so I can respond anything that you guys might have left out. Other than that, guys, thank you so much for joining. Really appreciate you guys stopping by, saying hi. It really fills my heart. And a quick reminder, do that like button. It doesn't cost you anything, and it helps me a lot. Spread the knowledge. And other than that, guys, see you guys tomorrow. Thank you.